Hey guys, welcome back to the channel. Today I want to discuss two brand new stocks that I've added to my portfolio, Booking.com and Expedia. Both of these companies operate in a very competitive environment in the travel industry, but I believe they both, and especially Booking.com, have the qualities required to be long-term compounders. So today I want to take you through both of these companies' growth stories and their financials and tell you why I have bought them. In addition to that, I want to speak about the pros and cons of diversifying your portfolio. So without further ado, let's get right into it. I've been wanting to invest into the travel industry for a long time now, as it's an industry where there are strong secular growth trends. That basically means that there are long-lasting and essential shifts in the nature of the industry which allow strong levels of growth. For example, you can see it in the digital ads market where a shift from traditional ads to digital ads has led to long-lasting growth. Companies involved in industries like this only have to do slightly better than the average to have excellent returns. Whereas if you're dealing with the opposite of secular growth trends, then they're going to be always fighting against the current. The travel industry has these kind of secular growth trends due to the emerging wealth of people in developing countries who are set to spend a much larger percentage of their general expenditure on travel and seeing the world compared to previous years. This has meant that the global travel industry has a projected CAGR or compound annual growth rate of around 5.1% over the next 10 years. That's compared to the global economy growing at 2.5%, so over double that. I originally got into the travel sector by investing into the aircraft manufacturers, Boeing and Airbus. But I quickly or eventually realized that they were very capital intensive. It means they have to invest a lot of money into factories, materials, and so on if they want to expand their revenue. If a customer comes to Airbus and says, please can you build me 10% more airplanes, they actually physically can't do it without investing loads of money into building new factories, and it's simply not easy for it to expand its revenue. Whereas I then started to look into the hospitality sector, and in particular, 4 companies caught my eye: Marriott, Airbnb, Booking.com, and Expedia. The reason these companies caught my eye is that they're extremely capital light. If any of these 4 companies have double the number of customers come to them and want to book accommodation, it doesn't cost them anything in order to do so, and it doesn't break their systems, models, or websites even. So these companies will just hoover up double the amount of revenue. And that's a much better business model in my opinion than a capital intensive one like what Airbus is running. The reasons why I eventually was put off Airbnb and Marriott was Marriott has quite a lot of debt and revenue isn't as predictable as I thought. I still really like Airbnb's business model, but they are facing declining earnings per share estimates over the next few years, and I didn't like the sound of that. In addition to that, they're also facing a lot of legal action in various cities across the world and have even been banned in some of them, so I didn't like that for obvious reasons. Booking.com, however, isn't facing any of those issues as it's working with traditional hotel chains, compiling them together in search results, and so there's not going to be any cities that will ban traditional hotels anytime soon, fingers crossed at least. Booking.com has shown that it's consistently able to grow revenues over time with a very high margin compared to other competitors like Expedia, for example. The reason it's able to do this is because the majority of its revenue comes from outside of the US. The non-US hotel market is very fractured, meaning that hotels have much less bargaining power against the fees from being listed on Booking.com. As Booking.com has expanded, it's also merged and acquired many of its rivals, meaning that it's now been left with a dominant position in many different markets. For example, it currently owns Kayak.com and Agoda.com, which allowed it to expand into the Asian market. It's even facing competition issues with the EU, which has sued it to prevent it from buying rivals now. That might seem like a bad thing on the face of it, but when you look at other companies that have been sued by the EU for their dominant market position, like Google, Apple, Microsoft, Meta, and so on, it really hasn't affected their business models. Even though they lost, they're still making just as much money and their competition is not catching up with them at all. So in reality, all this does is shows the dominance of Booking.com in the European hotels market and it's probably unlikely to be shaken anytime soon. Booking.com's high margins has allowed it to spend much more money on marketing and advertising for consumers. That in turn has driven higher revenue, higher profits, higher spending, and it's a positive flywheel that has allowed Booking.com to grow so rapidly over the last few decades. Booking.com is now the largest travel provider online by market cap, and I do expect revenue growth to slow down somewhat compared to previous years, just due to the law of large numbers alone. But I expect it to be still above the average of 5.1 CAGR for the industry in general. When you look at the financials of Booking.com, that's where it really excels. The forward price to earnings ratio of the company is only 20, and it trades at a 6% free cash flow yield. That's extremely high for a company that is growing at the rate Booking.com is. The company has zero net debt as well, and it's pumping the huge amounts of cash that it does have into share buybacks. In fact, the company has bought back over 7% of its shares within the last year, which means if you're a shareholder, you should be very happy to hear that. So that's why I bought Booking.com. But what about Expedia? Well, I bought Expedia because one, the financials look great, and two, they own most of the major competition hotels-wise to Booking.com. They own Hotels.com, Expedia.com, and Vrbo.com. That's the main rival to Airbnb, so it also gives a hedge with alternative accommodation. Expedia is a much smaller company than Booking.com, and it also is dealing with much lower margins. And that might not necessarily seem like a good thing, but it does mean that the company has much more potential for growth in the future, purely because it's smaller, and also because if it expands outside of the US, it can increase its margins and revenue pretty rapidly. In addition to that, if you look at Booking.com's 10K, it lists one of the main risks to its business model as being alternative accommodation. It's nice to own a company like Expedia, which has preemptively thought of this and acquired the main competitor to Airbnb in Vrbo. When you look at the financials of Expedia, they're very similar to Booking.com with some small differences. The forward price to earnings ratio is only 11, and the free cash flow yield is between 8 to 10%, which is better than Booking.com. In addition to that, when you look at the debt of the company, it's very minor compared to the overall revenue, and the share count of the company is also going down at a prodigious rate. Over 7% of its shares were also bought by the company within the last year. Its revenue has also increased by a compound annual growth rate of around 13% for the last 10 years, and that's unlikely to slow as much since Expedia is a much smaller company than Booking.com. Expedia isn't as efficient with its capital or money as Booking.com, and you can see that in terms of the capex or capital expenditure of Expedia. It's around 6% of the revenue versus only 1.6% for Booking.com. The return on capital employed for Expedia is also significantly less than Booking.com, and I really want this company to improve this metric in the future. I do think there are signs that the company is going to do so, as the company is trying to make efficiency improvements in its technology and other parts of the company over the last few years, and I hope these will pay off within the next few years. However, I ran both of these companies through a discounted cash flow analysis to see what the approximate fair value of the companies are based on current assumptions that I'm making for their future growth rates. I kept them all at historical levels and put the growth rates at around what I thought the companies would grow at in the future. And both companies came out undervalued. Booking.com is around fair value. It's only around 5% undervalued in my opinion, but Expedia is significantly undervalued, even assuming no efficiency improvements. I really like both of these companies at the moment. I'll probably be continuing to buy Expedia whilst it's at this price, and I might pick up more Booking.com if there is a dip, but I do think it's around fair value at the moment. Both companies have great network effects, and they're a great addition to my portfolio because they give me much needed diversification. I've been a bit worried in recent months about the heavy weighting towards digital advertising of my portfolio and wanted to diversify out of it a little bit without ruining the quality of the portfolio by buying poor quality companies. It would be bad if you turned diversification of your portfolio into diversification. And I don't want to do that. So I'm keeping the quality of the companies I add high. I also don't want to add too many companies to my portfolio. As Warren Buffett says, would you rather put more money into your best investment idea or more money into your 50th best investment idea? Well, I'm going to stick to having a portfolio that is concentrated into companies that I'm able to do research on and I believe will do well in the future. So let me know what you guys think of these two companies, what you think of diversification and this video, and let me know in the comments. Like and subscribe if you enjoyed it, and I'll see you guys next time.